Welcome back to Out of the Rough. I'm with Fred Kreger. Fred Kreger is a mortgage professional with American Family Funding. Fred's also the vice president for the California Association of Mortgage Professionals. Welcome back to the show.
Thank you, Fred.
Want to talk to you about demystifying the home buying process. Just break it down a little bit for us, because some people find it very intimidating, the process of buying a home.
Right. I get that, the first really important thing is for someone really to understand that instead of them going out and finding a home and find financing, please reverse it. We want to find out first, and a realtor would do the same thing to you. It says, have you been pre-qualified or pre-approved by a lender? And the answer is no. They're going to make you go to a lender and go find someone who can get
Make sure you can get the house. You find the house. Oh, make sure you can get the loan because you found the house of your dreams. First thing you do.
Exactly. So, really quickly, we're going to go ahead and get you pre-approved, which really all intents and purposes is we're going to check your income, check your credit, and check your reserves or your assets to make sure that you can afford the down payment and any closing costs, and then issue you a pre-approval letter. And you can go out and then start making, meeting with your realtor and start looking at the homes that you want to go ahead and purchase.
Well, you mentioned realtor. I always believed in using a realtor, using that professional who has that second set of eyes, if you will, versus going it alone.
Correct. And that's the most important thing because, again, your realtor, just as well as your mortgage advisor, again, is your advisor. They're going to listen to your wants, listen to your needs, and select homes that are appropriate for you and know the neighborhood. You may go during the day and find out a great neighborhood, but at night, maybe it's not such a great neighborhood.
And they're familiar with it.
Right, and that realtor's going to really understand. If they say, something, you have a 3-year-old child, well, let's look at some elementary schools that are nearby, versus having something that's 10 miles away, et cetera.
Absolutely, and it's a second set of eyes that unbiased.
Correct. Exactly.
So you've previewed properties. Mm-hmm. You find the property of your dream.
Right. So the most important thing, once you found the home, you're going to go ahead and what's called make an offer. And so let's say the home is worth is offering at $400,000. You make an offer at $400,000 or less, and the seller must accept your offer. Now they can come back to you and say, well, that's fine. You're offering $390,000. No, we're going to set it at $400,000.
They're going to counter offer.
Correct. Now that technically is a new offer. Mm-hmm. The one that you offered first is off the table.
So they have to accept that offer or counter offer, and there's all of a sudden it's a new offer, and you can back out at any point if they don't accept that exact same offer.
Correct. And there's sometimes, in this day and age, we've actually seen 3 or 4 different types of counter offers. Mm-hmm. With each one, it gets canceled until the new one comes up. Now, both parties must agree. Now, once both parties must agree, we now have what's called an open escrow. And what that literally means is that your deposit check will probably be asked. It's
down payment.
A down payment.
Partial down payment.
Partial down payment will be opened up into an escrow account, or an escrow officer will now take control of the transaction.
And what is that? Break that down just a little bit
Sure.
more.
So an escrow officer literally is like the traffic cop of the transaction. They take what the contract that you've written up and written out in kind of plain English, basically telling them, okay, the seller, you must do X, the buyer, you must do X, by this date, by this amount, etc. And they're kind of the person that handles the transaction that has absolutely no financial stake in the transaction. Because again, you want a third-party person that is kind of handling, this probably the largest transaction of your life.
Right, so they're making sure everything you agree to is actually agreed to and adhered to by all parties. So escrow is open, you put the deposit in, next thing you've got to go back to your lender to verify a few more things.
Right, most important thing, call the lender immediately. Let them know that you've opened up escrow. Don't wait a couple days or a couple weeks because, again, in this day and age, it's a little bit longer to close escrows in terms of getting a loan than it used to be.
It takes a little bit longer because of all the disclosure requirements are unbelievable.
Correct, and that's the biggest thing. So once that happens, we're probably going to ask for updated information, updated pay stubs, updated bank statements, etc.
Because they might have the borrower might have been pre-approved 2 months ago, 3 months ago while looking for a home.
Correct.
Right.
Then what we're going to do is we're going to go ahead and actually, well, there's 2 things. One, there's 2 types of inspections that's going to go on in the property. One is going to be what's called a physical inspection that the buyer probably will want to have, which basically is a person that will go and actually look in all the nooks and crannies, make sure the electricity works, the water works, the gas works, etc. It's going to point out any issues that particular home has.
Any deficiencies.
Right. So that's one inspection. The other inspection is actually going to be ordered by us, which is a home appraisal. So really, we have a home appraiser that's going to go out to that physical property and basically do an assessment that what is that property worth? You know, is it worth making sure that the home that you're actually buying is indeed what is being offered?
Right. Okay. So that's the appraisal. The independent appraisal is going to be done. Once those are done, you get the final approval. Correct. Now there are some other inspections, of course, not very common, like septics. If you're on a septic, not on sewer. If you have a well on the property for water, those are some other inspections that might come up.
Correct.
But the two main ones are the appraisal and the home inspection.
Right. So once everything goes according to plan, there may be a few conditions in terms of what things that we may need. We go ahead and order what's called the actual loan documents. These are the instructions, and unfortunately we kill a couple for us when we do this. It goes over everything about the loan, everything about the transaction, etc. And you'll actually go into the escrow company. The escrow officer will basically have you sign in front of her and have
sign in front of a notary, right?
Or sign in front of a notary to make sure that who is signing, you know, the actual contract is indeed the person that's actually buying the property.
Now, in this process, you get insurance. Is insurance? It's mandated, but do you have to go with the company that the lender picks, or do you pick your own insurance?
You pick your own insurance, and that's the most important thing people need to understand. They always ask me, well, do you have an insurance company that I have to go through? No, you need to pick your own insurance company because, again, it's your insurance. And
shop for the best rate you could possibly get.
Right.
So the escrow officer signs a notary signs the loan documents, the official loan documents. And then does it fund that day, or tell me about the process?
Here locally, basically what happens is that once people sign, and they usually give the remaining of their down payment,
at
that time, the loan documents go back to the lender. And the lender just makes sure all of the T's are crossed, the I's are dotted, make sure escrow officer did their job, make sure the lender did their job. Once everything is finalized, then the lender will actually go ahead and actually make that payment to the escrow officer. So let's say the loan amounts for $300,000. The lender will ship the $300,000 to the escrow officer, or excuse me, the title company. Then they basically will do the distribution of those funds. So, for instance, in that transaction, you know, the seller needs to basically receive their proceeds. Maybe the seller had a loan against the property, say for $200,000. Well,
they've got to pay it.
Right, that loan needs to be paid off. That's why it's so important. This escrow officer does a lot of work. It doesn't get a lot of accolades, but they are truly the traffic cop of this transaction.
Yeah, they're juggling a lot of balls, making sure the transaction happens. And once the loan funds, what happens? Is the house the day it funds?
Well, unfortunately, in the county of Los Angeles, we basically record what's called fund one day, and then we record the next.
Okay,
so what happens is we have to actually wait for the loan to be recorded with the county, and once that gets recorded, then the keys are get turned over to you, and now you own a home.
And you're the homeowner. I wanted to demystify that simply because once you dig into it, and if you have these professionals on your side, which you find a professional that you love to work with, a loan officer that you can trust, and a realtor you can trust, the process is demystified, and it can be done very successfully. Thank you very much, Fred. I hope you enjoyed this edition of Out of the Rough. I'm Fred Arnold. If you would like to view this show online, log on to scvtv.com or fredarnold.com. If you have any questions, send them to fred@fredarnold.com. Until our next conversation, please make it a healthy and prosperous day, and I hope this information helps get you out of the rough.